Oh, there we go. What's up for everyone on the YouTube replay? I hope you're having a great day. I'm gonna start this off with a quick portfolio update, then I'll get into some of y'all stocks. Someone left a comment, wanted me to look into one particular stock, so we'll do an update, look at that stock, and then we'll analyze all y'all stocks in the chat here. So let's start this off with my Weeble portfolio that has not done too well. As you know, I love being fully transparent. I'll share with you every stock that I own, my total portfolio performance, and lifetime in this portfolio is not looking too hot. We are only up 6.6% all time in here. And these are all the stocks that I own in here. These are my best winners. Sadly, we're up a lot on these, but I've taken a lot of profits on like Robinhood, SoFi, Dave, way too early. They've gone up way more ever since I sold them. But yeah, we also have some big losers down here. UiPath, Sprouts Farmers, Zoom is down 40%. Progressive. So yeah, that's our Weeble portfolio. I don't really have any particular goals. Some stocks that have been doing very well though is Iron Mountain. I can't believe it. We're up 33% on a REIT that has a 3.3% dividend yield. So that's one thing I was shocked about. Also, Southern Company, we bought this one just like a month and a half ago, has a 3% dividend as well, a 3.2% dividend yield, and we're up 10% on them. So some of these boring, higher yielding names have really been the winner. One stock I really like is Reddit at current valuations. I actually want to analyze them in a minute. But so yeah, this portfolio's done not too well. We have some hidden losses too. Like I've sold out a charge point for like a over $1,000 loss and stuff. So yeah, that's our Weeble account. But then this is our good portfolio. This is our Moomoo account. Luckily, year to date, we're up 30% in all time. I think we're up like we're up 300% all time in here. Just insane. Most of that has come from the past like year and a half. Just since 1 year ago on a return money weighted average, we were doing just as bad as the market. We were down 15% during April, but we bought the crap. We bought the life out of the dip down here. And now we're up 136%. Mainly that's from Comfort Systems. They hit an all-time high basically on Friday. I mean, this stock price appreciation, I just can't believe. It's like every day it just hits a new all-time high. I don't know what to do with FIC. So we're just going to not trim, not sell that one. Then also Powell Industries. We're up now. This is our best performing stock in terms of percent gain. We're up 645%. It used to be Robinhood, but Robinhood has fallen so much that Powell Industries has taken over. Then Amazon. This is my latest purchase. I have been buying the dip on Amazon like crazy. So the past 2 days, I've spent like $1,500 buying Amazon. Our cost basis is at 197 and the stock is at 198. So we're up, 0.7% on Amazon. But I just couldn't pass up the incredible valuation on Amazon. On the right here, Amazon's literally at a 25 forward PE. I mean, that's like the cheapest I've ever seen Amazon. It's like the stock has been flat. It's down, but like the profits, here's the actual profits right here. The net income profits, it was a record this quarter. So it's not like there's a huge disconnect between the fundamentals, the profits, and the valuation here because they're just sending down the multiple because all the software is being hurt right now. So anyway, I think Amazon is one of the best purchases to buy right now, not financial advice. Microsoft as well as a steal. Meta is a steal. A lot of Mag 7 names are very good valuations. So yeah, that's our Moomoo portfolio. And then finally, we have our Robinhood account. This is our dividend only portfolio where every stock in here pays a dividend. We're up 12% the past year, Actually, that's pretty good. That's like the S&P 500 returns. And these are all the stocks that we own in here. All these pay a dividend. All these are like dividend growth companies. So as you can probably tell, actually McDonald's took over Google as our largest position. Boring McDonald's hit a crazy all-time high yesterday. And so we're up 16% on them. And Google, only reason McDonald's overtook them because Google's, down 8% the past month, but no big deal. We're still doing great on them. Here's our total percent change on every stock. So luckily we are green on every stock in here. And we also have a Roth IRA, which is just a tax-free retirement account. Oh, on Friday, every stock in here was green. Pretty cool. Here's our total percent change on every stock in here. We're actually back in the green on Cavco. I can't believe it. Like they had a terrible dip. Like they were down 33%. Now they're only down 13. So nice little improvement there. So yeah, that's all our portfolios. Now we'll dig into some of y'all stocks. What up, MC? ZYZ said Microsoft. Let me look at Upstart real quick. Someone left a comment on my last stream to look at Upstart. Then we'll look into Microsoft, Root. We got some good names here I want to dig into. Yes, sir. So here's Upstart right here. I think this is like a car lending, like referral loaner or something like that. I don't even know too much. But if we go right here, their platform and referral fees, this is really impressive. If you go to it on a quarterly basis, these year-over-year growth rates in the middle, it's up 34% year-over-year. Last quarter's up 61, 105. And on an annual basis, for the full year 2025, it's at a record. It was higher than it was in 2021, 2022. Boom. So they're finally back at a record revenue. But let's see, are they profitable? Net income. So that's great news. Why is it not quarterly? I don't know. So here's the quarterly profits. So, for the longest time, they were making profits back here, but then it was a tough buy. Upstart was losing a lot of money every quarter, but now it looks like they're finally making some consistent profits again. We want to see them consistently make this net income because they just got net income positive. So I'm sure the forward PE is ridiculous. Oh, it's really not actually. Whoa. The forward PE is a 25. That's actually pretty fair for Upstart. Or just a 25 forward PE. They're a consulting service. Yeah. Personal lending and auto lending. So I think they refer people to car loans and get referrals for them. I'm not too sure, but yeah, some sort of lending kind of finance company like that. Kind of cool. So I didn't know the forward PE was a 25. That's not too shabby there. So I wanted to go over Microsoft because I cannot believe how cheap this company is. This is one of the most quality names out there, yet they're trading super cheap, like a super low valuation. I'll show you that. So on the right here, Microsoft's trading at 22 times forward PE, which means Microsoft trades at 22 times next year's net income. For the behemoth Microsoft, they've had some one-time adjustments to right now's net income this quarter, but the forward PE doesn't lie. It's a 22. That really is a dog cheap. Morningstar has this as a 5-star wide mo, incredible company. They are very diversified. They have 3 main businesses. This is their productivity and business software. Think Excel, Office 365, all that. This software business does over 120 billion of annual revenue for Microsoft. So that's why they're kind of trading with this whole software decline. Microsoft's kind of included in that basket, but that's just one business. One thing I love about Microsoft is their Azure cloud. They're a huge cloud player. I believe the second or third largest market share. This does also, you're not going to believe it, over 100 billion of annual revenue for Microsoft. So they have these 3 big businesses and they have the hardware PC sales. But yeah, it's mainly their software and cloud business that are booming. And here's their bottom line net income. Now, this quarter, they had a one-time adjustment. They didn't actually make 38 billion. They really made around 31 billion, but it was still an incredible most profitable quarter they've ever had, Q2. When you exclude, they had a one-time adjustment realization. They took a gain on OpenAI's valuation, so that added to their net income. So basically, don't worry about it. It's a couple billion lower, but it's still incredible. One thing being questioned on Microsoft is how much they're going to be spending on AI. So right now they're spending 30 billion a quarter. They're going to actually now be spending 50 billion a quarter for the next 4 quarters. So they're going to be spending a lot on AI. They're questioning what is the ROIC, the returns they can get on this. So anyway, I'm a believer of Microsoft. I think it can't get much cheaper than this. I super not financial advisor, but really a 22 times forward PE is super fair for Microsoft. ETF in one, cloud play, software play. They own Minecraft, gaming play. They own, what's that called? Xbox, it's they own so many businesses. It's incredible. So let's look at some more here. Did you see AppLovin, another 25% drop? Yeah, this was so weird. If you don't have this stock on your watch list, I'd put this one on there because they have the stock is crashing kind of like Amazon, but they have some of the most impressive fundamentals I've ever seen. And fundamentals always outshine in the long run. They had a great quarter. If we look at the EPS, they expected $2.90. They did $3.24. It was a triple B quarter to the point where this is why AppLovin, in my opinion, deserves your attention. This is real. This isn't some adjustment. They really made this quarter 1.1 billion of after-tax net income. Every quarter is. This is real. This is the real after-tax net income they're making every quarter. This growth rate is so impressive. And it's not just the net income, but also the FCF, which is free cash flow. Record free cash flow, 1.3 billion. Every metric's at a record. This is a record free cash flow. This is a record net income. Every metric's at a record. So if we go to the forward multiple here, this is why I find AppLovin so incredible. And you for sure don't want to sell this one if you're a shareholder. But AppLovin is at a 24 forward PE for a better growth rate than SoFi. They have some of the best growth metrics yet are trading at a low valuation. I mean, like it looks like on the left, their current valuation, like if you look on the left, oh yeah, they look expensive, 40 times PE. But when you look at next year's earnings, the forward PE, it's a 24. This stock is dog cheap. This is an advertising play, an ad tech company. That just prints money at this growth rate. And look at the EPS this quarter. The EPS, which is just net income, was a record. It was $3.24 this quarter. Record. And it's going to be next quarter. According to the analyst, it's supposed to be $3.45. And then $3.66. Like the net income is going higher and higher and higher according to the analyst. So that's where they get the 25 forward PE. That's why I love AppLovin. That's why if I was a shareholder, I would certainly not be selling. I'd actually be looking to dollar cost average, potentially buy some more shares here. I'm going to re-add them to the top of my watch list because this is really an incredible name that just have some of the best fundamentals. Hey, what up, Jay? Yeah, Amazon. Yeah, if y'all give me a minute, we'll come back to Amazon. Another huge software name that has been getting crushed. Oh, I saw some other ones though. Raimon said Ally. This is a bank. If you've heard of Ally Financial, usually they have like really good high yield savings accounts, but they've been kind of one of the worser performing banks. And let me see what their yield is. So you get a nice dividend yield, a 3% dividend yield, not too shabby. So let's see. Oh, so they're not really a bank. They really do automotive financing operations. So automotive finance, car loans, not too attractive of an industry right now. But let's see. In insurance operations, okay, that's cool. They do have an insurance business, corporate and other corporate finance. So anyway, so they're mainly an automotive finance and an insurance business. So not really a bank. Here's their net income right here. Because they're an insurance company, they usually have choppy net income numbers. I do notice it looks like in 2021, the profits were like much higher. Like it used to be a lot more. That might be why the stock is kind of where it was since 2021, because the profits were higher than they were in 2021. They're not at that same peak. Like JP Morgan's at a record, Goldman Sachs. So they appear to have a safe dividend yield. But let's see what the forward multiple is. So they have an 8 forward PE. That's actually really cheap. 8 forward PE. Yeah, hey, this app I'm on, Jojo. If you want to get this brokerage I'm on, my favorite app to buy stocks on. It's actually in the link tree in my bio, very first link there. It's a brokerage called Moomoo where you buy stocks. And it's affiliate link, full disclosure. But yeah, link tree in bio, first link there. So let me do Duolingo. So sorry, I probably couldn't give you too many good thoughts on Ally Bank. I apologize. But here's one that I think more people know about. This one is Duolingo. It's that language learning app, and all the fundamental metrics look great, but it's the thesis that's being hurt here. So you pay for Duolingo, subscription if you want to learn a new language. But here's the thing. In 10 years from now, the technology is advancing so quickly. Will humans need to like learn the skill of learning a new language if the AI live translation technology is so good, where your Meta Ray-Ban glasses just live translate the audio, where it's actually like really good? That's one thing that's being questioned. But check this out. And there's a lot of competition, like OpenAI, which is ChatGPT, is making their own language learning app that's free. But here's where Duolingo is why I'm not completely dismissing Duolingo, because they have some incredible fundamentals. If we go to their subscription revenue right here, this is so impressive. Like, yeah, this AI thesis is hurting them, their future multiple, but like their numbers right now are freaking great. It's up 45. Like, look at these year-over-year growth rates in the middle. It's always 40 or 50%. Like it's up 45%, after grew 48, after grew 48, after grew 49. Like this is incredible growth. And if you don't pay for their subscription, you see advertisements, and their advertising revenue is up 55%. So all their businesses are booming or at a record, but it's just the thesis that's hurting them. Like this is incredible revenue growth. It just hits a new record every year, every quarter. What is the forward multiple? So we don't look at their current pieces. On the left, they're at a 14, but on the right, they're at a 25. That's because they had a one-time adjustment this quarter to the net income. If you see on the very right there, it says they made $290 million. They didn't actually make anything near that. They only made $35 million, but they had a one-time tax realization, but anyway, I would be very careful. I'd keep the allocation to this one low. I'd keep it as a small size. Like I really wouldn't want this as a huge, meaningful size position in my portfolio, just because of that thesis that's really hurting software names right now. One of the better software names, I think, or if you're looking for just a more quality name to buy the dip on, I think Microsoft and Amazon and Meta are 3 great companies. I just bought $1,500 of Meta last week, so I think they're a good deal. Do you have any thoughts on Inflection being listed on the 17th? Yo, is that an IPO? I wonder if we can check out the IPOs. I don't know. I guess these are the to be listed IPOs, but I don't know. I have no. What's the ticker for them? Maybe we can check them out. So Oh yeah, Root. I think this is another kind of like insurance company. Um, d- uh, they were going bankrupt, but then they got like some loan and they got heck of a lot of deals. Like, or their revenue just exploded higher. Let me just pull up the revenue right here. So yeah, look at this. The revenue's at a record right here. Incredible revenue this quarter, and I think they're finally net income positive. Let's see. Okay, so they went net income negative this quarter. That might be why they're like trending down since earnings because they lost money. Because do they have a forward PE? Oh, I bet they do. Yeah, so it's a 40. So if you look on the left, they look cheap at a 17, but that's not the case. The forward PE is actually a 40, which makes them look, even on this dip, quite expensive if that's true, because the EPS just went negative. So we're having great top line growth, but we do want to watch the net income here. I think this is just some DTC insurance company. Yeah, direct to consumer insurance to customers. So kind of like a Lemonade. So we just want to see them make more consistent net income. It's really not the worst in the world. I love the top line growth. Maybe it's like a car insurance company. Okay, Root Car Insurance, something like that. All right, there you go. So, car insurance company. I like Progressive for car insurance, or just like, or just an insurance stock. The one I own is actually Progressive. We just saw that one's at like a 40 PE. Well, Progressive is actually at a 12 forward PE, and you get a nice yearly special dividend. They do something pretty cool where every year they do a special dividend. Like they normally pay you 10 cents every quarter, but at the top here, they just paid you $13.50. It was incredible. And I do own Progressive. I'm down on them. But yeah, okay. What was that stock I wanted to get to next? I forgot. Oh yeah, CEG. What's up? Max said CEG stock, and hey, Sultan. My bad. I forgot to get to Salesforce. Remind me to get to Salesforce too. That's another one kind of being hurt by AI, but I do like Salesforce. So here's Constellation Energy. This is a great utility. If you're looking for a utility stock in your portfolio, this company owns, I kid you not, this is the largest nuclear play. They own 30% of all the US's nuclear reactors. It is the largest and purest play for nuclear energy. There is no close second. And I am a shareholder of CEG. I love them so much. I'm totally biased going over them, but I own them for a reason. We're up 39% on CEG, my favorite unregulated utility stock. So if you want exposure to nuclear, natural gas, geothermal, all these data centers will still need to get powered. Like even in 10 years, these GPUs will still need to get powered. So I really like CEG. And they're not expensive. If we go on the right here, the forward multiple, basically next year's net income multiple, they're trading at 26 times next year's net income. I think that's pretty fair in my opinion. And you get a dividend, and they do share buybacks, and they do M&A. So pretty cool. Okay. Francisco said Hood stock. Yeah, Robinhood. They just reported earnings and they were good, but there was just only one metric that was bad. I actually I think I give you a really good analysis on Robinhood here. I am a shareholder of Robinhood. I'm up like 400%, so I might be biased here, but the one only metric that disappointed was the crypto revenue. Their crypto revenue fell 30% year over year. So that was the only bad news. But the best news was actually their prediction market contracts. This is month by month. They literally just created this 5 months ago. There were 300 million contracts traded this quarter, or actually, no, this month, just in 12. So you can add all these months together for the quarter. 2.9 billion contracts traded. And whenever you go do a prediction market contract, that's where a brokerage makes a juice of a commission. Because whenever you buy and sell stock, they make like a 0.1% commission, but they make a 2% commission on prediction market contracts. So it's 20x more valuable for their bottom line whenever you do prediction market contracts. And crypto is too. And the crypto revenue is at 30. But anyway, that doesn't matter to me. This is a great stock. I'm actually might buy the dip on them. I am trying to build up more shares. The revenue was 1.28 billion. And here's the best part. Out of this 1.28 billion in revenue, they netted in real after-tax net income, after paying like 50 mil of taxes, they made 600 million of net income, which means Robinhood's net margin is a 50% or 47%. Again, this was a one-time adjustment. Like 1 year ago, it says they made 900 million. They didn't actually look at the operating profit. They only made 550 mil. So it really was a record profitability quarter, record net margin quarter. It was an incredible quarter besides the small little hiccup in the crypto transaction revenue. So anyway, I'm not disappointed as a shareholder. I certainly would not be selling Robinhood. Every metric there impressed me in terms of the margins, the event contracts traded. So yeah, I certainly would not be selling Robinhood. I am a shareholder, so yeah, there's your analysis on them. And they're like a 31 forward PE. I think it's very fair. Is this pre-recorded? Nah. What up, AJ? This is not pre-recorded, but maybe I do sound like a robot. Sorry. Hey, what up, Matt? Good morning. Good morning, everyone. Yo, if y'all want to hit the follow button, we stream every day. I sell nothing. I have no course, book, WhatsApp. I sell absolutely nothing. Just on here, give my opinion. So yeah. Okay. What's some more ones? Palantir. Man, sorry if I'm missing stocks. There's a lot of stocks today. I don't know why. We got a lot of people. I appreciate y'all. But sorry if I'm missing some stocks here. So Palantir, great name. They actually are in the news right now. They were helping out. I don't even know if I should say it. But let's check this out. Palantir extends multi-year partnership with Airbus. Okay. So anyway, this is the best part about Palantir. They have two main businesses. A lot of the revenue comes from the government. Their government revenue's up 55% year over year. This is why Palantir's like gaining so much attention, because their numbers are impressive. So their government revenue, like a lot of police stations use their software, the military, the Air Force, it's up 55% year over year. After grew 33, after grew 12. So literally the growth rate is growing on the government revenue. And actually the most impressive part is actually their commercial side, which grew 73% year over year. I mean, just an incredible quarter. I mean, these year over year growth rates are just like, the growth rates are growing, as you can see. So that's why, they have such a high multiple. If you go on the right there, the forward PE is 108. Audio is cutting out. Well, hopefully it's not cutting out. Let me double check. Yeah, I think we're good here. I'm streaming on YouTube. If it's being weird, I'm streaming on YouTube and TikTok. The best way to support me if you want is watch a stream from YouTube. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio, but just type in YouTube Nathan Robert. But yeah, anyway, Palantir record everything. So as we know, if we just zoom out here, this is so great. Revenue's at a record, and same with net income. The net income has just rocketed this past year specifically. It's 600 million this quarter, and they have no debt. Huge cherry on top. There's just no debt on Palantir. Debt-free company. They don't owe anyone any money. They have like let's see how much cash they have. They have 7.2 billion of cash, no debt. And look at these free cash flow metrics. Record free cash flow as well. So the net income's at a record, revenue's at a record, free cash flow's at a record. That's why they have such a high multiple. It's still, this is the sad part, even on this dip, they're still expensive, at like a 108 forward PE, but they are quality. They are growthy. Hello, everyone. Please hit the, hey, thanks, Steph. I appreciate that. The grid says, please, what of real estate? Or what do you mean there? You want me to look at like a REIT or something? Yeah, if you got any stocks you want me to look at, give me the ticker and we'll check it out. I do own one REIT. The only REIT I own, which just means 90% of their assets are real estate. If they're a REIT, is Iron Mountain. It's a data center REIT, triple net lease REIT with like a 3.3% yield. Kind of cool. So, all right. What should we look at next? My apologies. So, Micron. Yeah, this is the huge memory shortage stock. So right now, AI and data centers and chips are taking up all the demand for memory. And there's like a huge shortage. Like right now, the shortage is going to persist into like 2028. Yeah, look at this right here. Cites supply constraints through 2028. Like Micron is booked out through 2027. So here's the crazy part. Even though this stock has had such a crazy rally, and is it like near an all-time high, near multi-year high, they're not expensive in terms of evaluation. And here's what I mean by that. If we go to this company's forward PE, which means next year's net income, they trade at 10 times next year's net income. And here's the proof of that. Here's their EPS projections. This quarter was a record, $4.60 on the right. It's never been higher. Never been higher EPS quarter, $4.60. Next quarter, it's supposed to be $8 and then $9 the quarter after. So basically, they're going to be doing nearly $10 a quarter, which is $40 a year of EPS, and it's a $400 stock. So that's how they get the 10 times forward multiple. So Micron really is, like, even at all-time highs, not expensive. So if I was a shareholder, I really would not be trimming or selling. I think it could go up to I think it could stretch up another 30%, to send the forward PE to like a 13. It still wouldn't be crazy valued at that price. So stretch this forward PE to a 13, that sends us up 30%. I think it might be possible. I wouldn't trim or sell. I remember you used to have, I did used to have realty income. You're right, Luffy. Oh, Reddit. You know what? Let me do Reddit because this one I think is also a steal. I was doing even more analysis on my own time. Isaiah, what's up? And SoFi. Hey, we'll do SoFi, Netflix. I do want to get to Eli Lilly and some of these other names. Sorry, I'm just a little behind right now. I want to get to like Dell and these other names. So here's Reddit. I believe this company is trading at 26 times forward PE in my own math. And when you do an X cash PE multiple, they're trading at less than 24 times PE forward multiple. Here's my thoughts on that. So Reddit, a lot of people think Reddit is just a meme stock, kind of a meme company, but this company's no meme. They have impressive growth. Their ARPU, which stands for average revenue per user, is up 40% year over year. So they're literally making over $5 per user now. And it was just the year over year increase that was so impressive. So check out the revenue. It's up 69%. After grew 71, after grew 21. So the growth rate's growing. And it's not just the revenue that's up, but the profits. This is what's incredible. They made $250 million in net income this quarter, plus this fortress balance sheet, no debt. Let's see how much cash they have. $2.5 billion of cash. That's nearly 10% of the market cap. The whole company's worth $25 billion, and they have $2.5 billion of cash. So already 10% of what you're paying is just their net cash on hand. Here's my forward multiple thesis. They did $250 million this quarter. If we annualize this, it's a bit too generous, but maybe not. So let's say that we annualize this, $1 billion of net income a year. The whole company is worth $26 billion. So that's a 26 forward PE plus the $2.5 billion of cash. And we do the X cash forward PE. So I just really think Reddit is a nice growth stock to buy on the software dip. And I'm actually going to be buying more. I'm still up. I don't have many shares. I wouldn't have it as a huge size position, but I have 4 shares of Reddit. I'm looking to buy more Reddit because it's just like so cheap. Can't believe it. So, next up, SoFi. Let me do SoFi. So this is another one, kind of like Robinhood, that's been struggling. Let's see if there's any weekly news. I know they just reported earnings. SoFi launches comprehensive cryptocurrency expansion with SoFi USD stablecoin, crypto trading platform, and a Bitcoin payment service. So they're really innovating in the crypto industry. But here, if you're a SoFi shareholder, and I don't own much of them, but if you're a SoFi shareholder, one metric you really want to focus on is right here, their financial services business, because this is what's been leading to all the growth in the stock, because no analyst expected this. This financial services revenue is up 76% year over year. After grew 101, after grew 141, after grew 287. It literally hits a new record every year, every quarter. No analyst expected this sort of consistent and this growthy growth metrics. So we can see the analyst expectations. That's the orange line right here. As we can see, for the past 3 quarters in a row, they just beat on everything. They beat on revenue and EPS, which is net income. They beat on net income every single quarter for the past 3 quarters. And the EPS projections are just up and to the right. And they historically beat every quarter. So that's why I think people are really starting to take SoFi serious. They're making over $100 million in net income a quarter. It used to be a tough buyback here. They were losing money every quarter. Now they're making over $100 million net income a quarter. And the top line sales growth is so good. That's why I think people really like SoFi. And I am a shareholder, so I might be biased. What's the multiple though? I think they might be a little pricey, even on the dip. I mean, not crazy pricey. 29 forward PE. I mean, that's where you start the nibble. Honestly, if you wanted SoFi in your portfolio, you don't make, if you wanted SoFi as 5% of your portfolio, you don't make it 5% today, but you go ahead and make it 1% today. So pretty impressive. What app are you using to check? Yeah, this app, it's in the link tree in my bio. First link there. It's actually a brokerage called Moomoo. If you want to get this app, I'm on. Someone said just the QQQ, please. Yeah, this is just an ETF. It basically diversifies your money into 100 different stocks, and it's tech heavy. Here's its top holdings. So Nvidia, Apple, Microsoft, Amazon, Tesla, Meta. So actually, someone just said Meta, and I did want to get to them because I think they're also a steal. So let's just click on Meta here. Meta, I do own, is a steal of a deal if you're looking for an advertising stock. I think advertising is going to be such a great industry. I mean, but this brokerage is telling me, what is this right here? There's a bearish flag forming. Well, anyway, that's the technicals. I like looking at the fundamentals because that's what outshines this. I cannot believe this. I really think the risk reward is incredible on Meta. I don't see them getting any cheaper. I really don't see them falling another 10%. On the right, Meta trades at 21 times forward PE, which means they're trading at 21 times next year's net income. That's so fair for the behemoth Meta that's like an ETF in one. Here's this right here. Their daily active users, they have 3.54 billion daily active users. You guys probably used their apps before, Facebook, Instagram, WhatsApp, Messenger, Threads. Threads, I actually found myself using that app a lot. They now have the same amount of daily active users that X has. And Meta just announced, which is going to be a great earnings tailwind, they're going to be introducing ads to WhatsApp and onto Threads. So they're just going to, that's just new, accretive new money to that's just going to be added to them. And this is incredible. Meta's revenue, it's 59 billion this quarter. And on this 59 bill of revenue, they netted, after paying, a couple bill of taxes, 22 billion. Last quarter was a total one-time adjustment. You see, they made 2.7 billion. They had a total one-time adjustment. Here's kind of it was a tax charge. Here's this is their earnings before taxes. So as we can see, before that tax charge, this quarter specifically was a record, but the quarter before, they didn't have that huge dip. So that's why we're looking at a forward PE, because they had this one-time adjustment. So anywho, I just can't believe how great Meta is. But one thing being questioned is how much Meta is going to be spending on AI. They just announced they're going to be spending 120 billion, or maybe it was 150 billion just in 2026. So that means here's their cash from investing activities. You really want this to be negative, because if this is positive, that means they're, actively selling out of their own assets. But they're spending 30 billion a quarter, or this quarter was a record, 35 billion. It's going to be 40 billion for the next 4 quarters in a row. And Meta doesn't make 40 billion. So basically they're going to be spending more than they're making. And Meta, for the first time ever, has a net debt position with their Prometheus bond issuance, which was right here. Again, if this cash and financing metric is positive, that means they're either issuing debt or issuing shares. And they just issued 25 bill of debt. So anywho, Meta, even with all that AI spend, is a steal of a deal at a 21 forward PE. I'm totally biased. I do own Meta. I have 5.1 shares. I just bought more in a fractional share. I never mind buying fractional shares, so I bought 0.1 shares of Meta. What price? It's at 638. I bought it at 616. So I'm not. Sometimes it's hard to spend like $600 to buy one share. So I spent $63 buying 0.1 shares. Like I'm always a fan of buying fractional shares. Okay. So yeah, that's Meta. I can't believe how cheap they are. It's a great stock to buy the dip on. And the next stock I saw some people saying here is Dell. This one's kind of a commodity. They're getting into server installation, kind of getting into super microcomputer space, which would be really cool. Hey, the trader, no way. Yo, I remember you in the Discord. Good to see you, trader, in Ryan's. And then we'll get to, sorry, I'm so behind, guys. I appreciate everyone that's here. There's so many people today. I can't keep up with all these stocks. I want to get to Arista Networks. Okay, so here's Dell Technologies. Let me show you the yield. You get a nice dividend yield. This is like a value play. Dell is a value stock. You get a 1.8% dividend yield, but look at the valuation on the right. They're at a 12 forward PE. I think it's a better buy than super microcomputer. So they're getting into this infrastructure solutions, basically installing server racks for you. And check out the growth rate the past 2 quarters. It's pretty good. It's up 25% year over year. The quarter before was up 44%. So that was some nice growth. And so if we go to their bottom line, here's their real after-tax net income. After they pay $400 or $500 mil of taxes a quarter, after they pay $500 mil of taxes a quarter, this is their net income. And check this out. It's well over $1 billion. It's like over 1.1 billion a quarter. And what is Dell doing with a leftover 1.1 billion in net income a quarter? Well, they pay a dividend, and that dividend only costs $350 million. The real winners, the share buybacks. Dell does, wow, like $1 billion a quarter plus of buybacks for the past year. So the net income grew by 32, but the net income per share is up by 39 because they bought back 7% of all the shares plus 1.7% in a dividend yield. So it's just a shareholder-friendly company. They're taking advantage of this 12 forward PE valuation by buying their own shares. So actually, I do like Dell as a value play. I mean, they're cheap. It's a low margin industry, and I know they have a lot of debt. So as long as their laptops are cooked, haha, yeah. Yo, shout out to the legend Aaron. Aaron on the YouTube stream for the $1.99 super chat. No way, dude. He said Marvel stock. Heck yeah, dude. Let me skip to Marvel. I really appreciate that donation. We'll do Marvel first. Man, Aaron, I hope you're having a great day. Hope everyone's having a great Saturday. Good morning or good afternoon. We're going to be live for another hour, so don't worry. We'll get to all these stocks here. Hey, Josh, dude, with the crazy roses and with the dolphin, I appreciate that. So here's Marvel Technologies. They're kind of like a chip play, and they just got profitable, which is great news. So basically, if you scroll down here to their net income, you know, the past 4 quarters, it's incredible. It's a record this quarter specifically, record profits. It's never been higher before. That's why I like this stock because it was, you really couldn't buy the stock a year ago. They were losing a lot of money every quarter. There wasn't really any consistency, but now the past 4 quarters in a row, they really are making like 200 to 300 million a quarter. And at this growth rate, like what's the EPS going to be the same time next year? So the EPS is going to go from 20 cents to 35. So they are experienced. They're going to have great growth still. So basically earnings before interest taxes, including that adjustment they had this quarter. Because here's another thing. If we go to their net income this quarter, since they made 1.9 billion, they actually sold off one of their assets. So if we go to their cash from investing activities, this number was actually positive 2.4 billion. Again, if this is positive, that means they're actively selling out of their assets. They actually sold off I don't remember what it was, but they sold off a huge division of their business for 2.5 billion, which led to this adjustment to the net income. So I wonder what they're going to do with all that net income. Maybe they're going to buy a company with it. Maybe they'll do share buybacks. But even losing that business, that company, the EBIT's still growing very nicely. So yeah, I wish I could give you more thoughts on them. So here's where the revenue comes from. Do beware, 44% of the revenue does come from China. So then the US is 20% and all these other countries. So I like how geographically diversified that they are. But anyway, there's Marvel. They're like a chip play, a semi play. So Arista Networks, have you bought anything recently or sold anything? There's plenty of redness. So the only thing I've really sold recently was actually Ferrari. I sold it on its massive rally, but I bought Amazon with all this shares. So I sold Ferrari at 382. Like we were buying it. Oh my gosh, this thing is like making this look weird. But okay. But anyway, I bought Amazon. Basically, I just loaded the boat on Amazon. I bought $1,500 of Amazon. So yeah. Okay, let me get to Arista Networks right here, and then we'll get to hey, what up, Hardy, Annie, chill out, Jack. Do you buy gold bars and keep them underground? No, I wish. I actually own no gold. I have 0 gold, and I'm kind of regretting it because I know gold has been doing good. I want to get to Take-Two Interactive as well. I saw, and Vertiv, there's a huge Vertiv factory kind of close to me. They're a cool stock, infrastructure play. I think they're at an all-time high. There's so many stocks I got to get to. I apologize. These are all great. Y'all give me great names. I want to get to Take-Two as well. And Netflix, remind me, Jason for Netflix. So here's Arista Networks. This is an AI beneficiary as well. As we know, Amazon, Google, Meta, they're spending like $150, $200 billion just this year. And that's straight to the benefit of Arista Networks and a lot of these other, I love the whole AI ecosystem, buy the companies that are going to be beneficiaries of the huge AI CapEx spend. And I think Arista Networks is absolutely going to be a beneficiary of that. So this is a pure growth name. This is what you want to see for a high multiple PE stock. This is what you want to trust if you're just going to diamond hand a growth stock. So the revenue's at a record. It's not just the revenue, but check out the net income. This is nuts. This is after tax as well. This is after they paid tax. 955 million. So this company at this growth rate, they're pretty much going to be making 1 billion of real after-tax net income every quarter for the rest of the time, potentially. Great balance sheet, investing $1 billion a quarter into the future. Phenomenal free cash flow. Let's see the actual free cash flow metric here. Yeah, look at that free cash flow. I mean, this is a great growth stock. They're expensive though. That's the one bad news is they are expensive. So if we go to the forward PE, it's a 42. But that's certainly a way better multiple than on the left, the 51 forward PE. And usually they beat this, 42 forward PE is using the orange line, and look at the past 3 quarters. They beat by a good chunk every quarter on the EPS. So potentially they're at like a 38 forward PE, which is very fair for the net income. Like the profits this companies make is no joke. I can totally get why they're a popular name. So yeah. Netflix real quick, and then Netflix. This one's a great. I love advertising. Think they're going to be a great industry this year. OpenAI, which owns ChatGPT, they're now spending on Facebook ads for the first time ever. They used to just have that organic word of mouth growth, but now they actually have to spend, and they don't mind spending money because even when you do Netflix ads, Facebook ads, you still get like a positive return. So here's Netflix. They are dog cheap. I can't believe it. On the right, Netflix is at a 24 forward PE. So basically means they're trading at 24 times next year's net income. One reason why Netflix is struggling right now is because they're trying to buy Warner Bros. Discovery. They're trying to buy them for like $89 billion. But check this out. Paramount Skydance enhances their bid to $108 billion. So and the offer to cover up Netflix's breakup fee. So Netflix is bidding 83 billion, Paramount's bidding 108. Basically, as the price of Warner Bros. Discovery goes higher, it's going to be even more and more decretive to Netflix's EPS, which is not good. So, but whether or not they end up acquiring Warner Bros. Discovery, this is a good deal. I think the stock's at a great deal. You know, easy business to understand, subscription model. They have 301 million premium subscribers. They make $11.69 per month per user. A lot of people would like cancel their Netflix subscription last if they had to cancel something. And here's their net income. Incredible. They're easily making, 2 to 3 billion in net income a quarter after tax. So just incredible net income. And they don't pay a dividend or really do share buybacks. And they just actually fully cancel their share buyback program to raise cash to acquire Warner Bros. So whether or not they acquire them, Netflix is a good deal to start nibbling. Not financial advice. Don't go crazy yet, but start the nibble. Start it as 1% of your portfolio because Netflix, I do think, is quality. So TTWO. Yeah, I'd keep Dell. I wouldn't have it as Dell as a big position, but yeah, I do like Dell. We'll look at Sony and Weeble. Charge the phone. Oh yeah, you're right. Oh dang, we're on 8%. I really need to get the charger. Okay, we got the charger. Take Two. This is the company that owns a lot of video games. So you probably heard of some of them before. They own Rockstar Games, so that's Red Dead Redemption and GTA 5. And this company's in a unique position because they announced, or they're going to be releasing GTA 6 in November of this year. I hope that it doesn't get delayed again, but oh my goodness. This thing doesn't want to charge. Okay, but yeah, they're going to be releasing GTA 6 this year, but it was delayed. But they're in a unique position because as soon as they release this asset, as soon as they release this game, that's literally going to bring them in billions of revenue instantly, and then just for years to come, just reoccurring just like in-game purchases, like recurring revenue from people who buy stuff in the game. So basically, you don't really look at the company's fundamentals right now. Like the net income's terrible. Take Two hasn't made a dime of profits in years. It's a terrible. The bottom line is really bad. Okay, my charger's really bugging out on me for some reason. Yeah, anyway, I don't love that they're not making profits, but as soon as they release GTA 6, that should bring them in a lot of new revenue. I think that's the catalyst we're waiting for. All right, if my charger bugs out on me again, then I don't know what I'm going to do. Okay, Sony. Let's do Sony real quick. So, this is the PlayStation company, Sony PlayStation. They also have a bunch of like music artists signed to Sony where they just collect this royalty income. Wow, check out the forward PE on the right. Sony trades at 17 times forward PE. Something just happened to their net income though. Yeah, look at this. This is definitely a one-time adjustment, but it says they lost 6.5 billion in net income this quarter. Yeah, they didn't actually. The core business made 3.3 billion. So there was some sort of one-time adjustment to their net income, which sent their current PE on the left to a negative 100. Yeah, anyway, kind of ignore that. Just look on the right. The forward multiples is 17. Yeah, here's their, what is this? Oh, yeah, PlayStation unit sales. Then they're, like, whenever you go buy something in the online PlayStation store, they collect 30% of every transaction. Then, yeah, here's their revenue breakdown. So gaming revenue, entertainment, imaging solutions, and then they're in music right here. That's up 13% year over year. So not too shabby. And yeah, they're a Japanese company, but we've converted the currency to US dollars. Basically, if we remove this one quarter, they usually print 1 to 3 or 1 to 2.5 billion net income a quarter, and you get a dividend, 0.7% yield, low payout ratio. So low forward PE. Actually, I like Sony. I do like Sony at that valuation. I really do. Tokenization in game IDKF going to work. Oh, of GTA 6, yeah. Someone said open door. It's a software to disrupt real estate. Nah, man, I've been to a few open doors. This is not a great company. This is just an interest rate sensitive, like meme, kind of like just an interest rate sensitive meme stock. Some activists said this was a 50x stock. Basically, what does this company do? They flip houses. It's that simple, and they can't get profitable. If we go to the revenue, like this is why people are find some interest in them because we're going into a lower interest rate environment. And look what happened the last time we were in a low interest rate environment. Open Door, look at these year-over-year growth rates. They were making $4 billion, $3 to $5 billion in revenue a quarter. But look what happened as rates hiked up in just one short year. Look what happened to their revenue, because this is how interest rate sensitive they are. It collapsed in just a year, down 62, down 69, down 70%. So, and it's kind of hasn't recovered since. This was like the lowest revenue I think they've had, since since the boom this quarter. And the net income isn't great either. Just kind of for all of eternity, this company just burnt net income. So nothing's really blowing me away here on Open Door. Maybe it could be a nice like interest rate sensitive swing trade, but I'm not loving the fundamentals. Yeah, they here's the EBIT they just lost. They're losing more than expected, losing more net income than expected. So it's just a tough one, I think. Yeah, not my favorite real estate play. But also, we can see, I wonder what the interest rate cut probability is. Let me actually check that out really quickly. So, oh wow. So in the March meeting, there's a 90% chance of no, we're not charging our phone. There's like something on my charger. It's really weird. I don't even know. Okay, oh well. 90% chance of no interest rate cut. And then actually, I think there's 70% chance of no cut the quarter after, the meeting after. So, all right, let's look at some more here. Oh, hey, I saw someone say NVIDIA. We actually have not looked at NVIDIA in actually like a long time. What up, Plasma? What up, Dawn? 104, Time In. We'll look at AppLovin and Hertz. Hey, I think Bill Ackman is just promoting them. Could you please tell me the app you're using on here? Oh, yeah. Hey, if you want to get this app I'm on, it's actually in the link tree in my bio, the very first link there. I'm actually on a brokerage. This is an app where you buy stocks on. It's an affiliate link, full disclosure, but yeah, broker called Moomoo, very first link in the link tree in my bio there. So here's NVIDIA. I actually think they're a really good valuation, not financial advice, but here's why. If we look at them on a forward multiple, because on the left, it's like expensive, like, yeah, dang, a 45 PE ratio. But when we look at them on next year's net income, they're at a 27, which is actually pretty fair. And here's where we get those numbers from. If we look at the orange line right here, check this out. It's literally going to go year over year from 76 cents to $1.56. Incredible. Like, so there's still going to be 100% year over year EPS growth. So, I mean, if we just kind of annualize $1.50, that's $6 of EPS a year. And that's how they get the 25 forward PE. We can see their GPU market share, 24% PC GPU market share. They're kind of coming for Tesla. They have their automotive software that has like their own autonomous driving software. And here's their net income. This is the best part. This is why NVIDIA has just been so popular lately. Incredible net income, real after tax of $31 billion in net income this quarter, way higher than it's ever been in its history. And this sort of, bottom line growth needs to be rewarded. And that's why the stock has done so well. And I don't think they're done. I really think if you buy NVIDIA right now, it's still law of large numbers. If we look in the top right, NVIDIA is worth $4.45 trillion. So for you to double your money, they have to be worth $9 trillion. It's a tough double. But I think if you buy now, you should still get like 7 to 10% of your money back every year, or like S&P 500 type returns. So this is Hertz right here really quickly. I don't love this one. This is that car rental company, Hertz Global. Basically, Bill Ackman likes them. This was the whole tariff thing. He likes them because they have like this huge, like used car, like portfolio. But yeah, they just can't get profitable. Did they actually make profits this quarter? No way. Well, I haven't looked at them in so long, but this is actually good news. They're actually profitable. So here's their revenue, the sales, the lifeblood of the company. The revenue, these are bad year-over-year declines. So, down 4%, after fell 5%. So not great. And if we go to the net income, though, they used to lose an incredibly insane amount of net income, but this quarter they actually made profits. They did make $184 million in net income. But when we average out the 4 quarters, they're still not net income positive. What are EPS projections actually? So yeah, they're supposed to go back to losing 56 cents next quarter, which is like a couple hundred mil. But anyway, yeah, they're leveraged too. That's a lot of liabilities. That's a lot of debt to pay off. When you don't make net income, or like they did, but they're going to be losing it next quarter. So it's just like a tough one. Nothing's really blowing me away here. I know they have their used car like portfolio value, but I don't know here. It's just the business model isn't too great. You just rent cars. I know they had lost a lot of money on their Tesla partnership. Yo, hey, we already looked at SoFi like twice, but if you give me a while, man, we'll look at SoFi again. Sorry, some people are saying stocks. We already looked at a lot of these like a few times, and I apologize if I'm missing them. Actually, I do want to get to Mo, and I do want to get to SoFi again. And AppLovin, I do want to get to AppLovin again too, and some of these other. So let me just do AppLovin now because this one I want to go over this one again because they really are such a good deal. Not financial advice. I really do love AppLovin because of the valuation on the right. They're literally cheaper than Apple with potentially better growth. On the right, they're at 25 times or 24 times next year's net income. Incredible metric, and the EPS isn't stopping. They just beat like crazy this quarter. Analysts expected $2.94. They did $3.25. So if we go to EPS right here, this was already a record quarter, $3.24. Well, next quarter is going to be $3.45 and then $3.66. So the net income growth isn't stopping. This $3.24 of EPS is the same as them making $1.1 billion of net income. And that's real. That's real after-tax net income. So that's why I like AppLovin, and I think they deserve your attention. They're experiencing like an NVIDIA-type moment where they're having this incredible bottom-line growth where it's like, at this growth rate, what's it going to be this same time next year? They're pretty much going to be making $1 billion in net income a quarter, and not just net income, but free cash flow as well. So they're retaining this. Free cash flow goes straight to their cash pile. They can do buybacks, dividends, M&A, whatever they want with this. They're making over $1 billion of free cash flow, $1 billion net income a quarter, and it's going to continue to grow. So they're a great growth name, advertising stock. One of my favorite advertising names out there. Meta, Netflix are good too. So what was this next one I wanted to get to? Uber stock. Yo, Uber's a steal. How are all the ports looking? Hey, Ant, yeah, actually, let me do a portfolio update after this. Oh, yeah, let me do Mo. Then we'll get to Uber and SoFi and AMD and some of these other names. So here's Altria right here. This is mainly a dividend name. You basically buy this to maximize your dividend income. So if we go to the dividend, you actually get a 6.2% dividend yield. So basically, no matter what the stock does, you're getting 6% of your money back just in a qualified tax-free dividend a year. I think that's pretty cool. And here's how we can tell, is that 6% dividend safe? Well, I'm going to show you how we can tell. And the forward PE is cheap at 12 forward PE. Again, you're not going to outperform the tech-heavy Uh-oh. Hopefully my Wi-Fi didn't just like tank on me. I think we're good. Okay, we're good. Okay. It says we're fully back, no issues. Okay, sorry about that. But yeah, here's the thing with Mo. If you go to their top line, the revenue, is declining kind of single digits here. It's down 2%, just kind of negative sales growth. And dang, it's been like that since 2021. So, it's kind of an industry that's maybe slightly going away, but they still print money. Here's their net income. They did have a slight one-time adjustment this quarter. They actually made around $2 billion of net income, not $1.1 billion, but that's okay. Let's not give them the benefit of the doubt. If we average out the 4 quarters, they're making like, I want to say $2 billion a quarter because that's what they're actually making. They really are making, let's just say $2 billion in net income a quarter. It's usually more than that. And let's see how much the dividend cost exactly. The dividend cost exactly $1.79 billion. So as long as they're making over $1.79 billion in net income a quarter, they can afford the dividend. And again, they can afford it. They just had these weird one-time adjustments. And we do kind of want to see the top line growth come back again. The stock, you're not going to outperform the tech-heavy S&P. The stock is lower than it was in 2016, but you do get a pretty sustainable 6.5% yield. All right, yeah, here's a quick portfolio update. Here's my Moomoo portfolio. This is my buy and never sell account. Basically, once I buy a stock in here, I never sell it. And these are all the stocks that we own in here. The only change we've really made has been loading the boat on Amazon. I just bought $1,500 of Amazon the past 2 days here. So I can't pass up a 25 forward PE. I think they're one of the best stocks to buy the dip on currently. And then we have our Robinhood portfolio. This is known in the top left as our dividend-only portfolio because every stock in here pays a dividend. And here are all the stocks that we own in here. Here's our total percent change. So luckily we are still green on every single holding in here. McDonald's, actually McDonald's is now our largest holding. That took over Google because they hit an all-time high. Yeah, McDonald's, Google, United Rentals, Constellation Energy, Meta. And then we have a Roth IRA, just a tax-free retirement account. We're trying to build it up more. Actually, every stock in here was green on Friday. But yeah, HCA Healthcare is our largest holding. We have Cavco, and then some smaller names like Cormetics, Webull, and Innodata. And then finally, we have our Webull portfolio, which has not done too well. In the top left, we're only up 6.6% all time. Really not too good. And yeah, I do own AMD in here. Yeah, this is where I own my AMD. I own my SoFi, Robinhood, Reddit. Iron Mountain is some of these dividend plays, like Iron Mountain has a 3.3% dividend yield. We're up now over 30% on them. Incredible. This is a data center REIT. And same with Southern Company. This is a regulated utility. We're up 10% on them. Another one with an over 3% dividend yield. So some of these like dividend names are actually having some nice appreciation to them. Ooh, and AbbVie's been doing good. Same with AbbVie. I made a whole video about these recently. AbbVie has a 3% yield, and we're now up 6% on them as well. So anyway, pretty cool. Let's look at some. That probably wasn't a too in-depth portfolio update, but I want to get back to y'all stocks here. I apologize. Let me do Uber, then AMD, then SoFi, then we'll get to Elf and GameStop, some of these other ones. Yeah, GameStop, that's kind of a momentum meme play, not a fundamentals play, but we'll still check them out. I got you. So here's Uber Technologies. I actually think this is another one of the best buys out in the market right now, not financial advice. If you wanted Uber as 5% of your portfolio, don't make it 5% today, but go ahead and make it 1% of your portfolio. They have incredible growth. I'm not just recommending this stock because they're on a dip. I'm recommending them because they have great fundamentals. So if we look at the forward multiple here, and they're cheap. If we look on the right, they trade at 21 times next year's PE or next year's net income. That is so cheap. 21 times next year's PE. And check this out. This is a really important metric. This is their monthly active consumers. So not just monthly active users, but monthly active consumers are 202 million. When the same time last year, it was 171 million. So they're still growing their monthly active consumers. Their main ride-sharing business is up 19%. The post-pandemic boom is still here. Like they're still booming, even though that's way over. This is up 20%, after grew 26, after grew 36. So incredible growth on the mobility revenue. And not just that, but also the delivery, which is Uber Eats and B2B, just like delivery. So that's up 29% year over year. Everything's booming, and not just the revenue, but the profits. Record profitability quarter. Uber has never made more profits in its history in terms of GAAP profits. So record profitability quarter on Uber. So it's not like Uber's falling because they're missing on their metrics. No, they actually triple beat on every metric. It's just the, I guess the EBIT slide missed, but it's just the thesis around, maybe ride sharing, and it's going to be so commoditized. I know Waymo is really big, but I still really love Uber. Good valuation, print free cash flow. They have stakes in a bunch of companies like Grab. They have a big position in. So let's do AMD. This is like the cheaper NVIDIA. I bought them because I thought it was like an easier double than NVIDIA. If you look in the top right, the market cap, they're worth $338 billion. So for you to double your money, they have to be worth around $700 billion. But look for NVIDIA in the top right. NVIDIA is worth $4.4 trillion. For you to double your money on NVIDIA, just buying a share today, they have to be worth $9 trillion. I think it's just a easier double potentially on AMD. And they just got a bunch of orders from like OpenAI. AMD and Intel face server CPU shortages. Oh, more shortages. AMD reports record Q4 earnings, projects over 60% annual data center growth through 2030. That is actually so crazy. Hold up, that's 60% every year. So that's why they're having their this year 60% growth. That's why even on the forward PE, they still look expensive, but you got to do a PEG, price to earnings growth ratio, and they're under like a 0.9. AMD really is cheap in terms of paying for the growth here. But it doesn't look that way at first glance. But they're actually not so cheap where I'd go crazy at current valuations. Like I'd really not go crazy over $200. But yeah, here's their market share. They have a 15% GPU market share. And this is the data center business they were talking about that's going to CAGR 60% through 2030. Check it out. Just this quarter, yeah, up 39% year over year. These year over year growth rates in the middle are very impressive. Let's check out their other one, their client revenue. Wow, that's up. That looks good, up 50%. And also their gaming revenue up 50. I guess it's like 2024. Okay. Well, anyway, I like it. Yeah, look at that. That's record net income. It looks like on the right there, record net income quarter. Let's see, is that record revenue? record revenue as well. So everything hit a record this quarter. Let's go. And we want to hopefully see them get more orders from OpenAI and stuff. And they have a great balance sheet too. I believe they have no net debt. Yeah, you can just see it. Yeah, I think they have no net debt. And the free cash flow. Yeah, the free cash flow is really good here as well. Record free cash flow. Record free cash flow this quarter. Yeah. So yeah, no complaints around AMD. I am a shareholder. I might be biased here. I did kind of just trim one share of AMD just to buy something else. What did I sell it at? I sold it at 259. Oh, dang, it's at 207. Or I guess anyway, AMD is a good stock, but it's not crazy a steal of a deal yet. Can you teach me how to do this? I'm a quick learner. Well, sorry, I actually don't do that. I don't teach. I have no course, book, what's up. There's no way to learn from me except watching the streams. I sell nothing. So yeah, unfortunately, I don't teach, coach. I don't sell any book or course. And so yeah, the only way to learn is just hit the follow button, I guess. I apologize. But thank you for being here. I appreciate you. I'm definitely not an expert. Yeah, don't listen to me either. I sell nothing. I'm just on here to give my opinion. If you want to support me, though, the only way to support me, the best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio. You can just type it into YouTube, Nathan Robert, and we'll find it. So I saw, what up? Lisa Tor said Chipotle. And then, oh yeah, wait, dang it. We got to do SoFi too. My bad there. We'll do SoFi and ServiceNow and HWM. I'm missing these. I apologize here. So here's Chipotle. This is one of the restaurant stocks. The CEO just came out and said, we're actually not going to offer any value because we're worth every price. And, you know, McDonald's stock, it just hit a record all-time high because the value, like the $5 meal deal at McDonald's, and like the $8 Big Mac meal is working very well. Oh yeah, here it is. Chipotle maintains premium pricing strategy, rolls out value menus despite sales challenges. So let's go look at how Chipotle's doing. Here's their number of stores. So they have 4.04 thousand stores. And the same time last year, they had 3.73 thousand. So they're opening up more stores. So that's just one reason why the revenue is going to grow, because there's just new stores adding to more revenue. But despite all that, we kind of did see some sort of slowdown to the revenue. It's only up 4.86%. The margin is actually the issue here. So the revenue grew 5%. So revenue's up 5, but the net income fell by 0.25%. So that just means the margins are slightly down. No big deal. Net margin is down 5%. No big deal. This is why I still like Chipotle. They still print money. This is their net income. It's easily 300 to 400 million of net income a quarter. Like, they still retain and still make a boatload of net income. It is, you know, we were wondering about the growth, but they still do print great net income. They have no dividend, which is okay. Yeah. So it's not just Chipotle, though, that's experiencing this huge kind of margin compression issue. RIP Wendy's. Wendy's is at like an all-time low. I mean, RIP Wendy's. Yeah, my battery. But yeah, Wendy's is struggling like a Jack in the Box. RIP Jack in the Box. They also are kind of like Wendy's as well at like this all-time low level. So it's not just a Chipotle issue. But yeah, McDonald's, though, McDonald's stock, they just said that their McValue menu is working great. And so they're actually at an all-time high right now. I'm actually really happy as a shareholder of McDonald's. They're boring. they're boring, but it's always the boring stocks usually do good. Okay. SoFi real quick. This is a really growthy fintech name. I am a shareholder of SoFi, but I think people are really starting to take SoFi serious because they have massive growth. So if you're actually, let's see, is there any kind of earnings recap here? No. Thought there'd be something, but not. Okay, well, anyway, first shareholder SoFi, this is the metric you watch. It's their financial services business right here, because this has been growing like a beast. It's up 78% year over year, after grew 101, after grew 141, after grew 300%. So this is an incredible growth. I mean, no analyst expected this sort of growth rate. Like, they expected growth, but not it to be that consistent and that good. We can see the analyst expectations right here. It's the orange line. The past 3 quarters in a row, they beat on revenue and on net income, which is EPS. So they beat on net income, they beat on EPS every quarter. So that's why I think people take SoFi serious. Look at this revenue growth. This has the DNA of a great growth stock. They print net income. They had a little one-time adjustment this quarter, so it makes it look like the net income's down 50% year over year. But it was a record quarter. Anyway, I really like SoFi. Great growth name, and they're at like a 31 forward PE. Pretty good. So not too shabby. HWM for a bat, he said, "Oh, Howmet Aerospace. I am a big fan of the aerospace and defense industry. These aerospace names are a nice hedge if the war fears, kind of geopolitical tensions escalate again." Um, let's see here. Uh, they're going to be expensive, obviously, just because all the aerospace and defense names have been doing phenomenal, just because of all the war fears and stuff. But yeah, on the right there, they're expensive at a 55 forward PE. So to buy it today at current prices is definitely tough. I don't know if I would, but let's see what they do. So they're in engine products, fastening systems, engineered structures, forged wheels. So nicely diversified. Then the market. So 53% of the revenue comes from US, and they got all these other countries. So nice geographical diversification. And here's their bottom line, their net income. They easily make, check that out. That's like a record profits, record consistency. They're easily making, 400 million, 3 to 400 million of real after-tax net income a quarter. And you get a small dividend, but look at the pace of the dividend growth. They're raising their dividend like a beast because the EPS is growing so much. So yeah, revenue is supposed to go up into the right. It's going to go from 2 billion to 2.28 billion. So yeah, not too shabby. Cash flow looks great too. Just expensive, unfortunately. Um, how about an how about investing in ETFs versus individual stocks? Yeah, I'm a believer, I'm a fan. Have the S&P 500 or have an ETF like the QQQ as the backbone of your portfolio, and then buy some individual stocks you know and love, that you can trust, that are in the S&P 500. So, most retail investors, and not just retail investors, but hedge funds and institutions, like they cannot outperform the S&P 500 on average. So if you can't beat the S&P 500 statistically, own it as a portion of your portfolio. And when it outperforms you, you won't feel as bad. I promise you, it's like the best advice I can give. And then as after you buy a little bit of it, then you buy individual stocks you know and love, like McDonald's, Google, Meta, stocks you know and use. Don't just buy some random Joe Schmo micro cap with, no revenue. All right. And if you buy Google, you'll love watching YouTube and you'll enjoy it more. If you buy Coca-Cola stock, you'll love every time you have a Coke next time. Or like Amazon too. You won't feel bad about paying for Amazon Prime. You know, can you look at Equinix? Hey, funny fact, can you give me the ticker symbol for Equinix? I don't know that one. If you give me the ticker symbol, we definitely will. So, um, eToro, if you can, thanks. Oh, dude, I feel like I'm missing some stocks here. My bad if I am. Oh yeah, like ServiceNow. Oh yeah, we'll do that one too. And CSCO, yeah, Cisco. I love Cisco for their cybersecurity division. So here's eToro Group. I think this is like an Israeli like crypto platform. Let me see. Yeah, so they're headquartered in Israel, and to trade online trading software. So it's like a brokerage out of Israel. That it's a crypto brokerage. So it's a crypto platform. Um, I wish I could give you more thoughts on them. They're kind of like the Israel version of Coinbase, I guess is the best way to put this. They have a good balance sheet. Are they profitable? They are profitable. So check this out. Or at least, again, they just IPO'd. Literally, we have 2 quarters of data. So we don't have that much data here. But for the data that we do have, it does appear that they're making net income every single quarter. That's good news. Do they have a forward multiple? They do. So they're saying they're trading on a forward multiple at 10 or 9.6, which is basically 10 times next year's net income. So yeah, like a crypto platform or something like that. So let's do ServiceNow. Then we'll get to some of these like Rivian and CNX. What's up, Marcus? And CSEO. So here's ServiceNow, one of the main software names that have been getting crushed. A lot of this, it's all the software names, but this is like a pure software play right here. Let's see, is there any news down here? Goldman Sachs warns software stocks could face AI disruption. So yeah, it's like this whole AI disruption thesis, but like it's not hurting their right now numbers. Like they just beat on earnings, but it's just like the forward thesis that's hurting them that may or may not happen. So here's their net income right here. Like they print money. Like this is real. They really do make 400 to 500 million of net income a quarter. The revenue just spikes up to a record every quarter. So this is what you want to see. That's so consistent, how it just hits an exact new record every quarter, every year. So incredible top line growth and bottom line growth. Like they do print net income and free cash flow. Let's see the free cash flow here. Yeah, Wow, record free cash flow this quarter by far, 2 bill of free cash flow. So the fundamentals look great. I think they're still maybe, yeah, so even on this dip, they are a little pricey at a 45 forward PE, but that's the cheapest they've literally ever been. I wouldn't go crazy buying the dip yet, but I'd maybe, yeah, I'd start to slight nibble. I'd be okay with slightly nibbling on service now because they are quality. And if you understand the AI risks that maybe could affect this one in the future, this one's like a much better, safer play than like Duolingo or something, which maybe I can really understand how AI might really replace Duolingo. But I don't know about service now, and I don't know about like what's the other one? The TurboTax company. I'm blanking out right now on their ticker symbol, but okay. Let me get to CSCO real quick. So this is another software name. They fell on earnings. I wonder what happened. I think it was some. All right, hold up, dear. They're saying we're AFK. We got to fix that real quick. Okay. Sorry if the stream went blank for a second. We're back. So let's see here. Cisco expands AI defense solutions. Cisco launches Silicon One G300 chip for AI data centers. Okay, let's go look at what their earnings were because I am curious. So they beat on revenue. That's the orange line here. They beat on revenue. They beat on EPS and they beat on EBIT. That's weird. It was a triple beat quarter, yet the stock fell. The valuation's fair on the right, a 24 forward PE. So that's very fair. Actually, I really like Cisco because you get a dividend too. If you like dividends, check this out. If you buy the stock right now, you're getting 2.2% of your money back just in a dividend every year. So 2.2% dividend yield there, a 24 forward PE. One of my favorite businesses is their security business, which did, I guess, decline 2% year over year. Not great, but they just acquired, well, not just, but like a year ago, they acquired Splunk. And that's what led to a lot of these, high growth rates right there. So yeah, main networking business, that grew 15. That's finally back. Like there was experiencing a decline, is finally back to growth. That's up 15%, double digits. That's great. Their services revenue, that's up as well, low single digits. But anyway, I can see why they're at like a 24 forward PE and not like a 30 because the growth isn't amazing, but it's still great. Like this is their net income. They really do print just consistently, 2 to 3 billion net income a quarter, 3.2 billion this quarter. I think they're finally recovering from their .com bubble price. Haha, look at that. Yeah. There's the year 2000. $77 stock. It's finally back. But yeah, they do have a safe dividend. Oh, EQIX. We'll do EQ. Wait. EQIX. And then we'll do CNX stock. Oh, yeah. Intuit. Yeah. Thanks for that. Yeah, that's the TurboTax people. I don't know if AI is really going to hurt TurboTax too much. Who knows? I mean, maybe you could just like upload all your documents and AI will give you your filled out 1099 or whatever. But here's Equinix right here. I believe this is like another data center REIT. I think this is a REIT. Let's go see here. Strong 2026 guidance. Okay, let's see. Co-location, interconnection. I believe yes. It's a data center REIT. They're just like Iron Mountain. Co-location revenue, that's at a record right now, up 10% year over year. So for these REITs, you really don't look at net income. You really look at the cash from operating activities, the core FFO, because this adds back the depreciation and the amortization from the real estate assets. So that's what you do a dividend payout ratio off of. Dividend cost $460 million a quarter. Dividend cost $460 million. If you looked at net income, you'd say, yeah, they're never even close to being able to afford it. Again, you don't look at net income. You look at the net income plus depreciation and amortization, this number down here. So safe dividend. What is the yield? A 2% dividend yield. So yeah, nice. That must have led to Iron Mountain growing as well. They're based probably, I wouldn't even say competitor, just like similar industry. Iron Mountain also experiences like this huge, very nice gap up. Both of the data center REITs did incredible. So yeah, I do on Iron Mountain. They have a they have a higher dividend yield. But yeah, Equinix might be a little bit more higher quality in terms of like their actual assets. If you have a bucket of $2,000, what would you buy? Well, I actually just spent $1,200 buying Amazon stock. I would like diversify into some great names like Microsoft, Amazon, and Meta. Maybe Netflix and some maybe buy the dip in some niche service decline stocks. So what are I don't know what service stocks I'd buy specifically right now. It's tough. Oh yeah, dang, Pinterest and Yelp just tanked. I had a list right here. Yeah, these are a lot of the service names. Like, yeah, ServiceNow and Salesforce are two of the more probably qualitier ones. Microsoft is the best one. No, AppLovin. AppLovin is so good. AppLovin's great. Um, Swing trade FSLY, someone said, or FS. Is that Fastly, or did they change their? Okay, so wow, they're up 13% right here. So they reported earnings, so that's why they're up. They rocketed up because they reported earnings. So issues 2026 guidance of 720 million above estimates on AI demand. So I guess AI is helping out this company. I forget what they do. They do networking services. How was the quarter? So yeah, it was a good beat. Check this out. Analysts expected 161 million. They did 172, and they lost way less net income than expected. They expected to lose 20 cents. They only lost 10. And yeah, they beat by double on EBIT. Basically, earnings before interest. Incredible. So yeah, I can see why they gapped up so much on earnings. It really was a good quarter. Here's the revenue growth. That's what you want to see for, growth name. I don't think they're profitable yet, but look how they're super close to it. They're only, they only lost 15 million this quarter. So, not too shabby. Decently good balance sheet too. They make good free cash flow as well. So yeah, there's Fastly. Nice. Wish I could give you more thoughts on them. APLD. Yeah, or I wouldn't buy Iron Mountain at current prices. Oh yeah, someone's been saying Rivian. I don't love Rivian, sadly, because I own a lot of Rivian via Amazon. They lost a lot of VPS because of Rivian's massive net income declines. But Rivian agrees to pay 250 million to settle IPO class action lawsuit over manufacturing cost disclosures. Well, oh, that's not good. But anyway, quarterly vehicle sales is 9.75 thousand. Guess that's down from Q4 of last year of 14,000. So that's actually not great. That's actually, yeah, dang, weird. The revenue fell 25% year over year. So the growth is almost gone. That is weird. So Rivian's revenue's down 25%. Here's the part I've never liked about Rivian. The revenue can do whatever it wants. The net income sells it for me as a stock I don't want to own. They sadly lose a super unsustainable amount of net income. They lose, close to $1 billion a quarter, sometimes more. And that's $4 billion a year. When you're worth 22 billion, you're losing 20% plus of your entire market cap just in net income every year. And it's not like it's getting better. Like they've done that for all of eternity. Like they lost over like 1.5 to 2 billion every quarter back here. So I just don't love these net income losses. And let's say they get profitable. That's the thing. The end game is a super low net margin commodity. An electric vehicle like Tesla, like it's so competitive. That's why I sadly just can't buy Rivian stock. Amazon's the largest shareholder though. I like that they're backed by Amazon and Porsche. Amazon owns 13% of all the shares. Porsche owns 12%, but these net income losses just scare me, sadly. But hopefully that was helpful though. I still like them, but I like their cars. Let's see here. Many people are thinking you started one. Many people are sleeping in. Hey, what's up, Michael? Good to see you. I don't know how many people would trust an AI with that much. I forgot what we were talking about there. Okay. Luffy says SE stock. I believe this is like a e-commerce company out of like Asia. So the stock is the same price that they were in 2020. Wait, let me just verify this. Look at this. So Southeast Asia is 70% of the revenue, and then Latin America is 20%. So basically, It's like an international Amazon stock, I like to call it, because look at this. They're an e-commerce platform. 72% of the revenue is e-commerce out of Southeast Asia. So this is why I like them. Like I really do like this stock. Check out the profits here. It was a tough buyback here. They were losing hundreds of millions a quarter, but now they make hundreds of millions of profit of net income a quarter. So this is what's really impressive about SE stock. They might be more growthier than Amazon because they're more international, more niche. So the revenue's up 38, after grew 30, after grew 5. So the growth rate's growing. That's great news. Let's see what the forward multiple is. So a little expensive at a 31 forward multiple. I mean, I'd maybe rather buy Amazon. Like this, that's maybe the sad part is. The sad part is this is a fair valuation for the stock right now. They're probably fair valued at current prices. Amazon might be a better buy, like to buy first, but I really like this company. I love everything. Love the revenue. They're beating expectations. Check that out. They beat good chunk on revenue. Slight miss, or actually a big miss on EBIT this quarter and EPS, but that's okay. I still like that stock. Ooh. Vagabond said APLD. Okay, APLD. Wait, is that the company? Oh, I think Nvidia owns that stock. You know what? Let me just check out the Nvidia portfolio for you. So yeah, we can actually see, what Nancy Pelosi and all these super investors own. In Nvidia, the stock is so big they own some individual stocks, and these are a lot of data center companies like CoreWeave and APLD. Nebius, they all do the exact same thing. Nothing too proprietary. All they do is just own a bunch of data centers or GPUs in data centers. But these data centers are in such demand right now from cloud computing companies. They need the rented out capacity of their GPUs. So this company does basically they rent out the capacity of their GPUs to people, to cloud companies. And they had an incredible beat this quarter. I could see why they gapped up so crazily on earnings. Analysts expected 81 million in revenue. Well, they came out and did 126 million in revenue. Just a massive beat. Nvidia's a shareholder here. Nvidia's kind of trying to prop them up because Nvidia gives this company money. All they do with that money is just go spend it all on Nvidia chips. So I don't love the long-term thesis here. Nothing crazy proprietary. This isn't the picks and shovels play, but I can see why they're still doing so good. I think they're still going to do good probably through the end of the decade. But the super long-term thesis isn't good with the depreciation thesis of all these chips that they have. So yeah. Yeah, DKNG. I can't cover the industry, but I can maybe look at their financials. I think Robinhood is the better play than DKNG. So DKNG, they're in the gaming industry, we'll call it. Dang, this stock is at its IPO price in 2020. So Robinhood's the better buy. I mean, sports prediction market, we'll just call it. Like it's so commoditized now where like Robinhood has done it right. Where I did a Super Bowl prediction on Robinhood, and I don't need any of these other platforms. So brokerages can just incorporate what DKNG does. They're kind of just being out innovated by digital other apps. And the revenue's good though. That's weird. That's good revenue. It might just be a margin problem. Let's see. Full year 2026 guidance below estimates. So yeah, if you have good numbers, but the guidance is bad, that's not good. DKNG partners with crypto.com to expand prediction market. NBA player specific contracts. We already have those on Robinhood. They're not cheap. Let's see what the forward PE is. Please. Okay. PE. Do we get that? Okay. So yeah, that's the thing. A 50 forward PE. I'd rather that's the crazy part. A 50 forward PE, even at this all-time low level, I think I'd rather buy a SoFi or a Robinhood or a Webull over DKNG. Hopefully that was kind of helpful there. It was kind of not too nice on that stock, but I don't. Maybe they're just being out innovated. I don't know. So Celerate said PICS. So this looks like they just IPO'd. Like literally, they've been public for 2 weeks. So it's a Brazilian company. So let's convert the currency to US dollars just to get a better idea here. So they're a bank, consumer banking, maybe a crypto bank. I don't know, but yeah, the revenue's up 100% year over year. That's impressive. Again, they just IPO'd, so there's not too much data we get, but yeah, they're profitable. They're making net income every single quarter. Revenue's up 100%. So yeah, it looks like a potential like a Brazil bank if you're looking for exposure to that industry. Hey, what up, George and Robert? Oh, what platform you on? Yeah, hey, funny facts. The platform I'm on is actually called Moomoo. If you want to get this app with my affiliate link, it's actually in the link tree in my bio, the very first link there. It's where you buy stocks on, and it's free, costs nothing, no commissions, no monthly fees, completely free app. My favorite app to do analysis on stocks on. Also, all these are affiliate links. I also have Robinhood linked up there in the link tree in my bio, and Webull as well. All these brokerages, but the most useful one, cheapest one, no fee, like best one for best tools and free is this one, I think. So if you're looking to buy stocks, this is the app I'd get, not financial advice, called Moomoo. It's in the very first link in the link tree in my bio if you want to use my affiliate link. You deposit like $100, we'll both get like a free stock, I think, or some free stock. So someone said Novo Nordisk. This is your weight loss play. And then we'll do, I'm down bad on UiPath. What's up, Jay? So, I'm down bad on UiPath stock. But yeah, Novo Nordisk right here. This is your weight loss play. And Novo Nordisk files patent infringement lawsuit against Hims and Hers. So yeah, Hims and Hers was trying to sell a knockoff uh, weight loss prescription, and Novo Nordisk was just not having it, which is weird because, so basically, if you're wondering what does Novo Nordisk do, this is your weight loss play. 94% of the revenue comes from their diabetes and obesity care products. So they own Ozempic and Wegovy. And there's just a lot of increased competition right now, from Eli Lilly's Zepbound, and they're losing their exclusivity for Ozempic in a couple years. So in Europe, they lose their patents for Ozempic in 2028, and then in the US and China, they lose it in 2030. So there's like this so that's why the multiple isn't crazy. That's why I think the multiple is like at a low teen multiple because of this. They're losing their patent. There's increased competition. They're lowering their prices. So I look on the left, the PE is a 13, but on the right, the forward PE is a 15. The EPS is supposed to go down because they've agreed to lower the prices of Ozempic to get into Medicare, Medicaid, and it's hurting their margins and hurting their EPS. But it's really not the end of the world here. It's just the long-term numbers that are being questioned on Novo Nordisk because they're going to be great probably for the next year. Or yeah, like just kind of look at this. Revenue 2 quarters ago was 12.18 billion. It's supposed to fall to 11.26 billion. So the revenue, the sales, the lifeblood of the company are expected to go negative. So that's just maybe one thing to be watched. But they still make good net income. They still make 4 billion net income a quarter, but it might also go negative too. So I think that's the reason why they have this low multiple. It's just that forward thesis, but it's like a mixed bag. You still get a good yield of near 4% dividend yield. So I don't know. I know Eli Lilly has been doing pretty good. I think they just reported earnings too. Thanks, this was helpful. Hey, thanks, JDC. What about Tencent? Oh, I love Tencent. That's my favorite Chinese stock of all time. Should we go over them? What do you think about Salesforce and Netflix you buying? Hey, we've looked at Netflix. We have not looked at Salesforce yet. Let me give a quick rundown on Salesforce. UiPath's another one that's been getting crushed. Oh, and T Rowe. What up, Norman? Well, I like T Rowe as a pure dividend play. T Rowe Price Group's a nice high yielding play. So here's Salesforce right here. Obviously, one being hurt by the software sell off. Wedbush calls Salesforce a historic buy amid AI disruption concerns, labels software sell-off, most disconnected trade. Yeah, so there's a huge disconnect between the actual fundamentals and the earnings. Oh, dude, there's a huge dude. Oh my goodness, I was just reading this. The Salesforce CEO just messed up. Salesforce employees petition CEO dude, the CEO got into a lot of controversy around ICE. He was like bragging how ICE, the Salesforce was helping out ICE, and it just wasn't a good look for the Salesforce. But anywho, let's go judge them off their actual fundamentals. So they're nicely diversified. They own Slack. That's one of the best acquisitions they've ever had. Slack right here, that's up 19%. After grew 9, after grew 12, after grew 55. Like that's on a streak of growth. But then, they're in services. sales, then there's Slack, then there's agent force integration and marketing and data. So if we go to their bottom line, this is the best part. Like they are at a record profitability quarter, except for that one-time adjustment, that one quarter back here. But they literally made this quarter record profits. 2.09 billion. That's after they paid 500 mil of taxes. So they really did make 2 billion in net income this quarter. And what was the free cash flow? Free cash flow was over 2 billion as well. What's the forward multiple? I'm going to guess like a 24. Like I bet it's cheap. So yeah, 24 forward PE. So yeah, historic buy might be right on Salesforce. It was a good beat this quarter, like on every metric. Like the earnings before interest and taxes expected 3.5, they did 3.64. So I wouldn't really be selling Salesforce if I was a shareholder. You get a dividend, a near 1% dividend. They do share buybacks, they do acquisitions. So not too shabby on Salesforce. I'd keep the allocation to that one low just because of the AI thesis right here. What is it? No, what I meant there was if you look down here, this guy at the very top, key event, it says Wedbush calls Salesforce a historic buy. Which what that means is, what does a historic buy mean? It just means it's like a once in a lifetime. It just means it's a great deal. I'm guessing that means. Oh yeah, my bad. There's someone had said this stock I wanted to get to. And we'll look at it. Amazon too. Yeah, Amazon's a steal. I just bought so much Amazon, George. Yeah, I think, the risk to reward looks so good on Amazon. I really don't see them falling much more. Amazon or Microsoft, which one's a better deal? I just picked Amazon, but they're both a steal. Both are really good. I might actually reanalyze Amazon after this too, just to get that point through, because I just bought them as well. So here's CNX Resources Corp. This is like an oil and gas commodity play, because unfortunately the stock is the same price that they were in 2005. So you bought the stock in 2005, it's the same price that it is today. But that doesn't, for the past 2 years, though, the stock has done great for the past 2 years, probably because of the oil Venezuela stuff. So yeah, shale. So yeah, this is a shale oil rig company, I'm assuming. Independent natural gas development. So yeah, oil and gas company. So what's the forward multiple here? A 13. So yeah, these commodity oil stocks usually always just trade at like a low teen multiple. So 13 multiple. Let's see what the revenue is. So the revenue is actually growing nice. It's up 28% year over year. Lower than what it was back in 20. That's probably why the stock, when we zoom out really far, is kind of the same price that it was way back here, because the revenue isn't at a record as it was. But I don't know what I just clicked there. But the net income the past 3 quarters have been really good. Natural gas prices have spiked ever since that winter storm kind of hit the U.S. Natural gas prices have been good. But this is a Canadian stock, maybe, or no? I think it's at CNX. Yeah, I think it's American. So yeah. Anyway, it's a natural gas play. There you go. Oh wait, you probably get a dividend. What's the dividend with this company too? You get no dividend. So they actually don't pay a dividend right now. They cut the dividend. Starting to buy uncovered calls. Oh, hey, yeah, covered, being in covered calls have kind of been the right move before today. So Amazon stock, let me be quick about this one. I just bought a lot more. I bought about 7 shares the past 2 days here. So I've been loading the boat on Amazon. Let's see if there's any kind of news here. Oh, sorry. The stream disconnected for 5 seconds, but it's back. Well, Amazon plans 200 billion capex for just 2026, which means they plan to spend 50 billion a quarter. So if we go down here to their cash from investing activities, it was 47 billion this quarter, a record. For the next 4 quarters, it's going to be 50 billion every quarter, potentially even more. So that's just one thing being questioned on Amazon, is they're spending a lot more than they're making. Like they're making 20 plus billion of after-tax net income, and they're spending 50 bill. So they're spending a lot of money. And we're questioning, is it going to get good returns? But the AWS CEO came out and said, like, yo, we're going to get instant marginal returns. As soon as we invest this money into AWS, we're instantly going to get returns on that, they're saying. Oh yeah, the FCC approves Amazon's deployment for 4,500 additional satellites for Project Juniper. This is a literal ETF in one. I kid you not. It's an e-commerce play, with their Amazon.com. They're a subscription play, an advertising play, a cloud play. They're a real estate play, a grocery store play. I mean, just they own Ring. They own so many brands. They're like an Instacart, a UPS, satellite play, AI play, robotics play, all in one. They're AWS web services. They're the number one cloud service provider. This does well over 130 billion of annual revenue for them. Just hits a record every year. Uh, I just like the stock is like falling, but like this is the before tax profit right here. It was a record profit quarter. It's never been higher. They did 25 billion in profits. Like, look at this revenue growth. This is why, like, it's so weird. Amazon stock isn't doing well, but the fundamentals are revenues at a record, profits are at a record. But they also are spending at record levels. But it doesn't bother me. That's just what Amazon always does. You can't out innovate Amazon. They spend money now, but they're going to get the long-term return on it. So great play. I cannot believe Amazon. I really never thought it'd get this cheap. That's why I think the risk reward is so good. A 25 forward PE. I could not see Amazon getting much cheaper than a 25 forward PE. So, yeah. And full disclosure, I do own them, and I'm only up 0.75%. So, yeah. All right, let's do UiPath right here. I am a shareholder of UiPath. I just don't really love this one. Probably because I'm down so much in them, but they're just being out innovated by like all the other AI names, like a Snowflake, a Palantir, and UiPath is just being left behind. But they're also, one of the reasons they're falling is because the whole AI names are falling. Let's see, what is the valuation on this company? So it's not like even though UiPath is at like this all-time low level, it's not like they're cheap either, sadly. If we look on the right, and again, I'm a shareholder here, I want to see them do good. It says on the left they're at a 26 PE, but on the right, they're actually a lot more expensive. They're actually at a 63 forward PE. So, but one thing I do like about UiPath is their net cash positions. Like, yeah, this quarter, you see how it says they made 198 million? They didn't actually. They only made 13 million. It was a lot lower, but it's still okay because they have significantly narrowed the losses. Like UiPath used to lose a lot more, but now they're starting to get to the point where by this time next year, they might be making actual profits every quarter, which is great news. Let's see. What another thing I like is their net cash position. Like here's their cash on hand, 1.4. Oh, their cash is going down though. They have 1.4 billion of cash. And what was the debt? Where's the debt? Oh yeah, like little to no debt. Less than 100 mil of debt. So they have like 1.1 billion in net cash, which means like 20% of the market cap is just their cash on hand. It's really not the worst though. It's not the end of the world here. I am a shareholder. Like they're too cheap to sell. Like that's why I haven't fully sold out of UiPath yet. I mean, they're too cheap to sell. I'm down 45% on them. But yeah, if I was going to buy the dip on a software name, I would not pick UiPath as like a first pick. I'd go with some of the other better ones, like a Microsoft. That's like a steal. A Netflix is a steal. Uber, man, Uber is a steal. Meta, all these are really good. Oh yeah, their earnings coming up should be fun. Hey, someone said Sun. Is that Sun Life, the bank, I think? Let me know which one you're talking about. Are you talking about Sunoco or Suncorp, the Australian company? I think you're probably talking about Sunoco. I've actually never heard of this stock before. Are they a fuel distribution company? Actually, they've done great, for an oil and gas stock. They've actually done a lot better than a lot of the other ones. Whoa! While paying a 6% dividend yield? Is this an MLP? A petroleum company. Huh. Fuel distribution, let's see what their bottom line is. Yeah, they are making net income every quarter. Oh, wow. ET's the largest shareholder here. Ticker symbol ET, Energy Transfer, actually is the largest shareholder of this stock right here. And ET is an MLP, so I don't know. You might want to be careful. I don't know if that one's an MLP, but I know Energy Transfer is an MLP. And that's why they have these crazy high dividend yields. Like this one has a 7% dividend yield because they are an MLP, which basically MLP means a master limited partnership, which means you actually are not a shareholder, you're a partner, and you get a K-1 tax form, which are like notoriously hard to fill out and stuff. So Zero, what's up? He said CSIQ. What's this stock? Canadian Solar. Okay, so I don't love the solar names. I like First Solar is like the only solar stock I like. So this stock, Canadian Solar, is the same price that it was back in 2007. The Chinese right now are just printing out solar panels and like such a cheap price. It's so commoditized. But let's see here. Revenue is down year over year. So the growth is gone. The revenue's down 1% after the revenue fell 18%. So that I can kind of see why the stock is struggling. They kind of lost their growth, the top line growth there, but the revenue is slightly down year over year, down 1.4. And the net income, like look at these profits. They're just really choppy. Like look how consistent they kind of used to be. But now for oh my goodness, the past 4 quarters, it's kind of choppy. You know what I mean? Like the profits look kind of weird. If you want a solar play, like the best solar play in my opinion is actually FSLR, First Solar. They've done a little bit better on the stock price because the fundamentals are way better. If we go to just the net income right here, this is incredible. They're making easily a couple hundred million of real after-tax net income a quarter, and I can feel my phone slowing down right now. I wish my charger wasn't broken. Where did my charger go? Maybe I'll try it again. But yeah, actually, I'm not going to be live for too much longer. Dang, we nearly been live for 2 hours. I appreciate everyone that's been here with me. If y'all want to hit the follow button, we try and stream every day. I sell nothing, no course, book, WhatsApp. I'm just going to give my opinion. If you want to support me, though, the only way to support me, the only way to is just subscribe to my YouTube channel, hit the like button. I'm trying to build up my YouTube channel, and I'm streaming on there as well. So if you missed anything, you can like rewind it on YouTube. So Adobe is down like crazy. What are your thoughts on XYZ? This is like a PayPal. So check out ticker symbol XYZ. This is Cash App stock. So if we go right here, Cash App is most of their business. It's 63% of the business. And unfortunately, Cash App is the same price that it was back in 2018. But it's not just a Cash App problem. It's also PayPal, which owns Venmo. So Venmo stock is also Venmo's the same price that it was back in 2016. So PayPal's done a little bit worse. I think they're just kind of being out innovated. Like it's just like a commodity of like, what does Cash App do? You just give money from one person to another, and then Cash App takes a fee. Like that'll eventually just be like so commoditized. Like there should be no room for profit there. You just send money from one person to another. I think on Cash App, they're like a brokerage now almost. How is that growing? Okay, so that's not great. Cash App revenue, we can see the past 3 quarters is actually negative 3% year over year. What about a Square, kind of like a website builder? That's up 12%. That's actually the winner here. Square is actually doing very well. And I like that this company's profitable. If we look at the operating profit right here, look at the profits specifically. Like it's actually like I can see why they're doing a lot better than PayPal. They're actually a lot more profitable than PayPal is, or in terms of how they've grown. So they had a one-time adjustment this 1 quarter, but they really do make like this is crazy. The revenue's up 2.3, but the profits are up by 50. So that really was a gross margin expansion of 16%. So wow, the gross margins and net margins have really expanded. And I'm just gonna guess. I think it's maybe because Cash App is getting into the brokerage industry. I don't know, because the growth was negative year over year, but they really have good margins. I actually like them at a 17 forward PE. There you go. Check out Zoetis. Hey, this is an animal healthcare company. So they help out pets and livestock, like live cattle. So if you've ever seen like a cow has like this big white circle in its ear, that's actually like a parasiticide where it like prevents parasites from like getting on their fur. It like spreads throughout their body. So anyway, yeah, that's 25% of the revenue, parasiticides. Then they do vaccines for pets, dermatology, anti-infectants, pain and sedation. This is all for pets and animals. I like how diversified that they are geographically. Other markets like almost like their pets more than people in the US. Like that was one of the things they were advertising. Oh my goodness, so I just had a metric, and I've actually made multiple YouTube videos about this stock. Actually, I wonder if I could go back and find it in the comments back here. But like 40% of people would like, oh my goodness, I'm not going to remember the exact metric, but like would spend their last paycheck on their dog to get them better. Or like, I really don't remember it was some crazy metric. But anyway, if we go to their bottom line, this is what's great about Zoetis. They print money. easily 6 to 700 million of net income a quarter. We can see the trend of that. It's just up and to the right. So not just net income, but just EPS. EPS is growing faster. EPS is net income per share. EPS is growing a little faster because they're actually buying back their own stock like crazy. So yeah, they're doing share buybacks. They pay a dividend too. It's a nice dividend payer too. You get 1.6% of your money back just in a dividend. And they did sell off recently. One of the reasons why, if we go to the revenue, it slowed down recently to like low single digits is because they actually sold off a lot of these. They sold off their basic prescription business, like their generic prescriptions that really anyone can sell. They sold off that business for a couple $100 million. And when they did that, so obviously now the sales are going to be lower just because they sold it off, but the margins are up. The margins are higher because they sold off their lower margin portion. So anyway, they kind of did it's like a couple months ago they did that. So they did a shift in their business. So that's one of the reasons why they've seen a slowdown in the net income and revenue, just because they sold off that business. But I still really like Zoetis. Good margins, nearly 30% margins, nice dividends, nice share buybacks, cheap valuation at an 18 forward PE. Pretty cool. Charlie said VOYG. I've actually not heard of this stock. And then we'll look at some of these other ones. Then I got to go. Oh, yeah, KSPI. Yo, my bad there, Nathan. We'll look at KSPI as well. So this company just IPO'd like a year ago. Voyager Technologies. What is this? Yeah, dude, this charger's just cooked. Defense and national security. So it's kind of like an aerospace or a defense play almost. And what's weird is a lot of the defense names have been doing great because of all the war fears and geopolitical fears, but not this one. This one hasn't been. So defense and national security. That's up 30% year over year though. And there are space solutions that's down by 40. Let's go look at their website. I am actually curious to maybe get a visual image of what their website is. I guess here's their website. Mission critical solutions, missile defense. So maybe like a Golden Dome contract kind of company. Yeah, look at that. Yeah, Golden Dome it said. So when we combine all the revenue though, the revenue combined, it actually fell year over year. It fell. So the sales, the revenue's down 0.03. And they lost 20% more money. They lost 18 million, so they're not profitable yet. So that's maybe why investors aren't too happy. Top line growth is gone. They're losing a lot of money. And when you lose, 30 million a quarter and you're only worth 1.5 billion, that's not good. But I just wish I could give you more thoughts on them. I just don't have too much data to work with there. So KSPI, let's check this one out. So this is Caspi.kz stock. Okay. They're nearly at an all-time low, unfortunately. So I feel bad if you're a shareholder. Also, we're actually going to convert the currency. I think this might be like Kazakhstani revenue or currency. I'm probably pronouncing that wrong too. Where are they headquartered? Yeah, Kazakhstan. I don't know why I can never pronounce that word. But anyway, they're cheap though. They're a 5.7 forward PE. That's actually a really cheap valuation. So this might be a nice international stock. Let's see what they do. Marketplace revenue. That is at $1 billion. That's in US dollars. They're also a fintech. Fintech's up 8% year over year. And then they payments. Where's the revenue come from? So yeah, 99% of the revenue is Kazakhstan. Ukraine is a little bit of their business. But yeah, marketplace revenue. Here's their bottom line. They really do make, and this is in US dollars, good net income, 500 million of USD. So basically 2 billion of after-tax net income a year, which the profits did fall slightly year over year. So that means the margins fell. So yeah, that is one thing to look into. The gross margins fell by 27. Net margins fell by 40. Still a great net margin at 25 and a 45. But why did it decline so much? I don't know. Still cheap multiple, 6 forward PE. Kazakhstan, maybe like a software business. All right. Can we do InnoData, please? Yeah, InnoData. I love this stock. They also just got a huge Golden Dome contract and a big contract with Palantir. I'm so bullish on this stock. I am a shareholder, full disclosure. They're actually my smallest position. Like I have stocks where I love them. They're worth owning, but they're so risky that you really don't want to have them as major size positions in your portfolio. So yeah, I do own InnoData. My total position is worth $400. I have a lot of positions like that where I love the stock, but they're just so risky where I don't really want them as a meaningful size position like a Power Solutions, a Clear Secure, and Innodata. I actually want to. I have the most trust I've ever had in Innodata today, more than I've ever had after that huge Palantir and Golden Dome contract from the government. So yeah, if you didn't know, their main customers right now is Meta, Google, Amazon, and I think Nvidia. Uh, they're a data labeling company. They have these digital data solutions, and they've just been beating on every metric every quarter. That's the orange line. And check this out: the past 3 quarters, they beat on every metric, and in 2 quarters, it's supposed to be 72 mil of revenue. So revenue's going from 58 mil to 72. It's going to be a great year-over-year growth rate. And they haven't just been beating on revenue, but also EPS. EPS is net income. They expected 13 cents. We did 24, like nearly a double. And on EBIT, basic earnings before interest, they expected 6.5 mil. They did 11.7. So just a great beat here. Revenue's at a record. It's going to continue to hit a record. And they're already profitable. Like, that's the crazy part. Innodata is already profitable, making net income every quarter. And they're a small cap. That's what I like about them as well. They're only worth 1.4 billion, but out of all the 1.4 billion-dollar companies, I want the one that just partnered with Palantir. The federal government has no net debt, prints net income, has great growth, beating on every expectation every quarter. This is one of my favorite small caps. They're only worth 1.5 bill. So yeah, I'd certainly put that one in your watch list if you're looking for a new day. Hey, what up, Cruz? Yeah, happy Valentine's Day. I forgot it was Valentine's Day. Yeah, happy Valentine's Day, Cruz, and everyone. Hope you're having a good day. It's normally I don't do stream on Saturday, but I'm like, hey, I'm not doing nothing, and we can look at stocks to buy next week. We've been live for 2 hours now. We'll look at like one or two more. Then I got to run, sadly, but Rocket Lab, currently invested in Dave. Yo, me too. I own Dave and Innodata. Yeah, we'll try and stream before my phone dies. Okay, so here's Rocket Lab. This is one of my favorite space companies, but they're extremely overvalued. Rocket Lab schedules 4th hypersonic test mission for U.S. defense. And they also they have so many contracts with NASA and JAXA. So we go to their space systems right here. This is what you want to see. They have great revenue growth. Their revenue here just hit 100 million plus for the first time ever. Revenue was 114 million. These year-over-year growth rates are incredible in the middle here. It's up 36%. After grew 81. So just holding on to that growth. And not just their space systems, but also their launch services grew 95% year over year. So both businesses are growing incredibly. This is kind of what you want to see for a growth stock with a high multiple. The revenue's up 47% year over year. We want to see them continue this crazy growth. They also just bought Geost. Yeah, if we go to the cash from investing activities, they spent $200 million buying Geost. And I think they're buying another company for a neutron rocket company or something. But anyway, I like Rocket Lab. They have like a $600 million backlog of orders too. They're just like really pricey. A negative 210 forward PE. I'm talking like more expensive than Palantir. They have an extremely high multiple, but they're like the most quality space name. What's this one here? Fosito, what's up, man? Hope you're having a great day. This is Hubs right here. I was actually analyzing them last night for like fun for some reason. Hey, OLP Papa, thanks for that gift there too. I appreciate you. But yeah, HubSpot right here. This is like a Salesforce competitor. They do kind of, I think, exactly what Salesforce does, but they just got super profitable. So check this out. If we go right here, for all of history, this company lost money. But if we zoom into the past 2 quarters here, this is great news. They're making money. So at this growth rate, like what's it going to be the same time next year? Let's actually see if there's EPS projections. Yeah, they're supposed to stay EPS positive for the next 2 quarters in a row. So this company is already net income positive. Great news. They're just in that software basket of just names to sell off, So if Salesforce is doing bad, this one's going to be doing even worse. So there we go. This revenue growth is so impressive. Like, look at that. Revenue hits a record every year, every quarter. It's just so phenomenal. And they're finally at net income positivity. It's just the software thesis that's hurting them. Like, because they just now got net income positive, technically they should be really expensive. Yeah, an 85 forward PE. But you really want to do like a 1 or 2 year out multiple on Hubs. Another one that's just being hurt by the whole software sell-off. NU Holdings, yeah, this is one of my favorite crypto banks. So as we know, crypto slash Bitcoin is like 40, 50% off all-time highs, but not NU Holdings. This is a crypto bank out of Brazil. That's where crypto is actually really popular because here in the US, it's really popular, but we don't use crypto for transactional purposes. That's why they have one in Brazil where their currency isn't too good. It was genius. So NU Holdings is a crypto bank out of Brazil. 92% of their revenue comes from Brazil. And y'all aren't going to believe this. This is some NVIDIA type growth. This is their, in US dollars, USD after tax net income. Insane. Insane. They're easily making like 600 plus million of after tax net income a quarter. It's unbelievable. So if we go to the multiple here, this is why I think they're having a disconnect from the price of Bitcoin because the fundamentals are so good. They're at a 21 forward PE. That's the same PE as Meta. I think it's very fair. Like, even though this stock is pretty close to an all-time highs, I think it's going higher. I think the forward PE could easily stretch up to like a 25 to 28. So anyway, NU Holdings, a really cool bank there. YouTube said HCA has been doing well, healthcare all around. Exactly. You know, HCA healthcare, actually, part of that is from THC. I actually should not have said those letters back to back. I'm talking about the ticker symbol for any. Okay, but this is Tenet Healthcare. This is your main hospital play behind HCA Healthcare, and they had incredible earnings. The stock gapped up like incredible 13% in one day, and that's why HCA Healthcare randomly went up so much on one day because they do the exact same thing. So yeah, HCA Healthcare is one of the best stocks I've ever analyzed, and we're up 16%. We bought this stock the day it hit an all-time high, and we're up 16%. Actually, as like one of our last stocks here, I'm going to analyze HCA Healthcare because this has the DNA of a stock I just trust. First off, it's a healthcare company. Like, even in a recession, people are still going to a hospital. It's like people are always, sadly, it has been unethical, maybe a for-profit hospital group, but people should always have the choice of what hospital they want to go to. And check this out. This is the crazy part. The net income's up 28%. So net income's up 28, but the net income per share is up by 44. How did the EPS grow so much faster? Well, it's because of the share buybacks. You're not going to believe this. Here is the total common shares outstanding. Well, actually, this is even better. This is the diluted weighted average shares, which includes stock-based comp or options that employee stock options that could dilute in the future too. I've never seen a company do this as well. They've bought back 9.6% of all the shares. After they bought back 6% of all the shares, after they bought back another 6%, after they bought back 10%, after they bought back another 10, so look in 2020. In 2020, not even that long ago, there was 340 million shares or 341 million shares. Today, there's only 231 million or 230 million. So as the shares go down, that makes the cost of the dividend go down, makes the EPS go higher, makes the PE ratio go lower. So here's the EPS right here, record EPS on the left there because of the buybacks. Anyway, HCA Healthcare, and they just print money because, their per ticket, per admission prices up as well. Anyway. There's the hospital group. So Warren Buffett owns 60 or 86 million of NU Bank. Yeah, Warren Buffett or Berkshire Hathaway owns that. Warren Buffett's like, I'll never buy Bitcoin, but he will buy NU Crypto Bank. So yeah. But yeah, congrats if you own HCA Healthcare. They're a nice defense name. And, as kind of all the software names have been doing good, these kind of boring defensive stocks have been doing good, like your healthcare names, like an AbbVie. Actually, that's another one I've been kind of recommending. I've made some YouTube videos about this one. AbbVie, we're now up 5.7% on them, not including the dividends. So they have a 3% plus dividend. I believe AbbVie will give you a 3% dividend and 3% share price appreciation every year. Let me actually see if I can pull up the dividend history. Dividends receivable, is it from AbbVie? Yeah, look at that. So we have $5.19 coming in from AbbVie. Not too shabby. So yeah, that's our Webull portfolio. So let me as the very last stock here, let me analyze Uber, then we'll end this with a portfolio update. So I thank you to everyone that's here. If you wanted to follow button, we stream every day. We've been live for 2 hours now. I sell nothing, no course books. So if you wanted to follow button, I appreciate that. We'll be live tomorrow. Tomorrow Sunday, we're going to be doing 2 3-hour streams tomorrow. So we're going to be live a long time tomorrow. I'm sure you'll catch me. So here's Uber, final stock we'll analyze. I think is a great deal. This is the final one we're analyzing. I think it's a great, buy it at right now's price. It's not financial advice. If you want Uber as 5% of your portfolio though, don't make it 5% today, but not financial advice. Go ahead and make it 1% because they have been going through something. Oh, they just had a bunch of partnerships. Yeah. Uber and WeRide partnered to deploy 1,200 robo-taxis across the Middle East. Uber to acquire Jeter's Turkey delivery portfolio for $430 million. Uber and Baidu partner for Dubai Apollo Go autonomous ride-hailing services. So they're getting into this autonomous driving industry, and they're a cheap valuation. I can't believe it. Uber on the right trades at 21 times forward PE, which means Uber trades at 21 times next year's net income. Here's another great metric we get. These are their monthly active consumers. So not just monthly active users, but monthly active consumers are at 202 mil versus the same time last year it was 170 mil. So in the year before, it was 137 mil. So their monthly active consumers are really growing. And even though the post-pandemic boom is over, they're still booming. Their main mobility ride-sharing business is up 19%, after grew 27, after grew 37. So incredible growth, just continuing it. And not just the mobility, but the delivery business. Uber Eats, that's up 29%, after grew 19, after grew 9. So they're just on the growth rate over there is growing. So they're on a streak of growth, record free cash flow. Like, look at this. When you make $2.8 billion of free cash flow, that's how you can afford, when you don't pay a dividend, that's how you can afford to buy this company for $435 million and afford to partner and deploy 1,200 robo-taxis and do all this stuff. And it's not just the free cash flow that hit a record, look, record free cash flow this quarter, but also record profits. Record profitability, 1.77 billion. It's never been higher before. So it's not like Uber's falling because they're missing on their metrics. No, it's just the whole thesis around, I guess, AI and software. And, I know Google owns Waymo. It's kind of like an autonomous driving service. So it might get so commoditized like Tesla with robotaxi. Oh, well, but I think it's the platform that's going to make the money where all the users are. All the users are on Uber. And whoever goes to Uber and says, hey, we'll partner with you. Since you have all the users, we can book a Waymo through your app. That's going to be the winner. So anyway, that's the stream. I hope you guys have a great rest of your day. If you want to support me, the only way to is just subscribe to my YouTube channel. It's called Nathan Robert. Linktree in bio. Type into YouTube Nathan Robert. But yeah, I'll see y'all soon. Thank you for being here. We're doing another 6-hour stream tomorrow. It's going to be fun. See you soon. Thanks to everyone on YouTube and TikTok. Thank you everyone on YouTube the most. YouTube replayed, Cruz, Mayan, Flacito, Nathan, Cruz, JRS, Jesse. Oh, I forgot to look at some of these names here. My apologies if I missed some.